Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Global stocks rally with the S&P 500 hitting a new record high as cooler US inflation reinforces bets on Fed rate cuts. Slovakia's Prime Minister in hospital after an attempted assassination in broad daylight. The shooting of Robert Fico brutally exposing the widening political divide in the EU nation. Plus, Russian leader Vladimir Putin is given the red carpet treatment in Beijing as he looks to Chinese President Xi Jinping for backing in his war against Ukraine. Let's check in on some of the earnings stories right now as we keep an eye, of course, on the geopolitics. Siemens and the redhead coming through as we dig through the numbers, but confirming that they will be selling part of their business, one of their portfolio companies, to the private capital group KPS. This is Inomatics, which is a maker of engine drives. On the second quarter, in terms of the profit coming through from the industrial business, that is a miss for Siemens in the second quarter. That is also a redhead across your Bloomberg terminal. 2.51 billion euros. The estimates had been for 2.76 billion euros. So it's a miss when it comes to the second quarter industrial business profit. In terms of orders, coming in below the estimates as well in the second quarter, 20.45 billion euros of orders. The estimates had been north of 21 billion. In terms of the full year, they still see full year revenues up 4 to 8%. The estimates had been for around 4.61%. So a range of between 4 and 8% in terms of full year revenue is what's being forecast by Siemens. Again, they will be selling their Inomatics business and unit to KPS for around 3.5 billion euros. And in terms of the net income, that was a beat on net income, 2.2 billion euros. The estimates had been for a little under 1.7 billion. So on net income, it is a beat, but on orders, it's a miss. And then on the industrials profit, that was also a miss for Siemens. We are going to be bringing an interview with the CEO of Siemens, Roland Busch, of course, later in the show. That's at 6:45 a.m. UK time. Staying in Germany, let's bring you the numbers coming through from Deutsche Telekom, of course, the majority owner, of course, of T-Mobile in the US. So the US business in focus for us today and the German business as well. And when it comes to Deutsche Telekom, it is a beat on the earnings estimates, and it is the German mobile growth that seems to be behind that. In terms of first quarter earnings, adjusted earnings out of the German area coming in up 3.5% at just shy of 2.6 billion euros. They still see a full year post-lease about 18.9 billion. In terms of earnings, adjusted earnings per share, EPS, around 1.75 euros per share full year. In terms of the first quarter, the revenues coming through for Deutsche Telekom, just shy of 28 billion euros. The estimates had been essentially in line with that. So they're meeting estimates in terms of the first quarter revenue. Let's check in on these markets. It is risk on the back of slightly softer inflation data and the CPI front out of the US, and also weakening retail sales as well. Dollar down, yields down, equities bid. European stocks looking to add just shy of 0.2%. The FTSE 100 looking to add 26 points, pointing higher by 0.3%. Commodities getting a lift as well. We keep an eye on the copper story and, of course, what's happening with iron ore and the linkages to the real estate sector of China. S&P futures pointing to gains of around 0.1% after busting through fresh records yesterday above 5,300 and looking to build on that today. The Nasdaq looking to gains of 29 points, and tech got a significant lift. The likes of Nvidia and the semiconductor makers in the US as well. Let's flip the board cross-asset, have a look at what's happening in yields. Of course, the US benchmark 10-year yields fell about 10 basis points on the back of that data out of the US yesterday in terms of inflation. 432 right now. Yields down a further 2 basis points. The Bloomberg dollar index plummeted yesterday, currently down around 0.2%, giving a lift, of course, to Asian FX as well. Copper at 10,364, a further gain of 1.4%. The short squeeze story still unfolding in the US. Iron ore rallying today almost 3%. On expectations that maybe there'll be some resolution in terms of the real estate crisis in China, up 2.6%. We watch the markets then in terms of the real estate, in terms of the miners in the UK. Let's get more now in terms of the Asian session, bringing Avril Hong standing by in Singapore. Avril.
Yeah, Tom, we are seeing quite the party in the Asia Pacific. It is against the backdrop of that US CPI print. The stock gauge for the region climbing to the highest in more than 2 years. And on the region's benchmarks, they're getting fuel from the gains in tech stocks. Australia's benchmark is outperforming. If you're wondering why, because we got a jobless rate surge down under. That's fueling expectations of RBA rate cuts. The Hang Seng getting that lift from the tech stocks as well as Chinese lenders. Let's flip the board and dig a bit deeper into the sectors that we are watching very closely in the Asia Pacific. Hang Seng Tech lifted by 10 cents after its earnings beat, dragged by Alibaba after that miss. But we're also keeping an eye on JD.com and Baidu, that report later today. But the Chinese developers, as you alluded to, really in focus today. We're seeing the gauge of them in Hong Kong jumping to the highest level since December last year after Bloomberg reports that China is mulling a plan that could get local governments to buy unsold homes from distressed developers. And this could help to address some of the issues related to excess inventory as well as liquidity. So we're seeing that gauge really jumping today. But you can see the outliers that we're also focusing on, the Japanese lenders and the automakers for different reasons. The Japanese automakers are down because of that strength in the yen today. The banks is because of the expectations of the BOJ rate hike getting tempered. Remember, that could be a profitability issue if we don't get those BOJ rate hikes. Let's flip the board, take a closer look at why, because we got the Japanese GDP print deeper contraction than expected. And this is because consumers, companies, they cut back on spending. Our economists have flagged that this might be a temporary factor as well because we got that major automaker that cut back on output, no thanks to safety scandals. But that is still part of what markets are digesting. We're seeing the Japanese currency still climbing today below the 154 level. It's really about those lower US yields, Tom.
OK, Avril Hong checking in on the Asian market reaction to the inflation data and stories coming out of Japan and China as well. Avril, thank you very much indeed. On the details around the inflation story and, of course, how it's impacting cross-asset, a measure, of course, of underlying US inflation cooling in April for the first time in 6 months, with markets now pricing in 2 rate reductions by the Fed this year. The US Bureau of Labor Statistics, meanwhile, conducting a probe after it inadvertently posted the data 30 minutes early. Oops. For more, let's bring in Bloomberg's MLive strategist Mark Cranfield. Mark, here we go then, off to the races. This is risk on. How much further does this rally have to run then?
Well, if you think we were having a party in Asia today, you're probably in for an even bigger one in Europe, because this was the missing piece for the European Central Bank and the Bank of England. If they had any doubt at all that they could start their easing program, the Fed effectively, or the CPI data, has just given them the green light, because they can be much more confident that the Federal Reserve will do something this year. And so now I think we can fully expect that we get rate cuts in Europe and the UK pretty soon, probably next month. And that will just keep this bond market rally going. And don't forget, there's been a huge backup, because where we were right at the beginning of the year, there was euphoria about bond markets around the world. We had to backtrack considerably because of the inflation prints in March and April. And now we're only just starting to resume that rally. So there is a long way to go on the global bond rally, particularly in the G10 space, exclusion, of course, of Japan. Europe and the UK right at the forefront of that. You're probably going to see a lot more of it. You're going to get tired of hearing the word Goldilocks by the end of the day. But that's what you have. You have a situation where yields are coming down, the dollar's coming down, and equity markets are loving it. So you're going to have your own party today, just like we had in Asia.
Well, we're looking forward to it, Mark. And in fact, some of the producers are suggesting they might send some party invites in the post out to you, because they're keen to get their party hats on with Mark Cranfield. Thank you very much indeed for setting us up for what looks like a Goldilocks day. Of course, MLive strategist Mark Cranfield with the details around the inflation print and the read across to these markets. To geopolitics now, where Vladimir Putin has arrived in Beijing for talks with President Xi. As you can see, they rolled out the red carpet in quite some fashion. Russian forces, of course, pressing ahead, meanwhile, with a new offensive in Ukraine. China's leader welcomed his Russian counterpart as he began a 2-day state visit. Let's bring in Bloomberg's Rebecca Chewing-Wilkins for the implications, the importance of this. Rebecca, what do we know about the visit so far? How important is this for Putin?
gratifyingly warm welcome for President Vladimir Putin into the Great Hall of the People for those talks with Xi Jinping, so directly with Xi, but also sort of small groups as well, according to state media. Now, Xi Jinping has come up with sort of quite a full-throated support for Putin, reaffirming and saying that, China is ready to work with Russia as a good neighbor, friend and partner, and again stressing that they can consolidate their friendship for generations to come. So very much sort of affirming the no-limits nature of the friendship that came, that announcement came just weeks before Putin invaded Russia. But I think there's still this sort of somewhat unspoken tension. There are certain strains going on behind the scenes, not least these continued threats of US reprisals for what they perceive to be Chinese support of Russia's war industrial machine.
OK, Rebecca Chun-Wilkins, thank you very much indeed. Monitoring this important visit, of course, by Vladimir Putin to Beijing, a two-day state visit. Now, it is the final day of the Qatar Economic Forum, powered, of course, by Bloomberg. Horizon's Middle East and Africa anchor, Jumana Pasechi, is there on the ground for us. Been interviewing a number of key CEOs, of course, been involved in a number of panels at QEF. Jumana, what stood out to you from this event? What are some of the kind of key takeaways that you've gleaned?
Yeah, Tom. Well, there have been so many different types of conversations going on here. I would say geopolitics, of course, has dominated this year for obvious reasons. Yesterday, Bloomberg editor-in-chief John Micklethwaite had a conversation with General Petraeus, and one of the things that stood out from that conversation is that in Petraeus' view, there needs to be a plan for post-war Gaza, and he doesn't think that the Israeli government have gone far enough in thinking about what happens next. So that was a comment that stood out just from a geopolitical perspective. But of course, we are here talking about the opportunities of the region. We've had a lot of conversations about the economies of the GCC, their push for diversification. An example, yesterday I had a panel with some of the tourism ministers from the region. Saudi tourism minister, right now 4.5% of their GDP comes from tourism. They aim to get it to 10% by 2030. What are the steps in place that they're trying to do to get to that number? The CEO of Accor you had yesterday on your own show, he was saying this is the region to be because of that tourism drive and because of the number of people that are coming to the region too. Lots of other panels, Tom, about the business of sports. That's always interesting to people from the region, outside the region, and what the region is doing to attract some of those mega sporting events. And then today is actually going to be a day that's a lot more tech focused. So we're going to be having conversations about AI hubs looking to be set up here. I'm going to be having a one-on-one with the Ministry of Communications over here in Qatar about some of the opportunities they're looking at. Of course, a big theme for UAE as well, in addition to all the VC funds, private equity funds coming out here, seeing what the opportunities are and whether or not their investment landscape can actually lend itself to a portfolio building opportunity out here in the region too. So plenty of discussions, and I would say it's a combination of geopolitics, economics, and as ever, deal making.
OK, Bloomberg Horizon's Middle East and Africa anchor, Jumana Pasechi, of course, at the Qatar Economic Forum in Doha, with a great wrap of some of the conversations coming through at that event. There's plenty more guests coming up from day 3, by the way, of QEF in Doha, including exclusive interviews with the Africa Regional Director of the UN Development Programme and the CEO of e-commerce company Jumia. Also today, Bloomberg will be at JP Morgan's Global Markets Conference in Paris. We're going to be speaking to CEO Jamie Dimon, plus the lender's chief economist and the head of global commodities strategy. What a day to be talking commodities. There's plenty more coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Slovakia's Prime Minister, Robert Fico, remains in a serious condition after an assassination attempt. The country's Interior Minister says the shooting was politically motivated. Let's get more on this story with Bloomberg's Andrea Dudic in Prague. Andrea, what more do we know then about the Prime Minister's condition at this point?
At this point, we know that he may be out of life-threatening condition and is recovering after surgery. What we are awaiting this morning is confirmation from a wider group of his allies, his colleagues, and the medical staff that his condition is indeed improving.
Just give us an idea of what kind of politician Fico is. He has a long history, of course, in that country, Slovakia. What do we know about him as a politician?
He has a long history in Slovakia and also in Europe. He is one of the longest serving leaders in the EU itself. He's a very popular politician, experienced. Over the years, though, he has turned into a populist, a fierce critic of European values. In Slovakia, he has sort of become the anti-voice of everything, critical of vaccines, immigrants, LGBTQI community, liberal media, NGOs, and even supporting Ukraine by sending more weapons to the country. In many aspects, the ideas and actions he has taken mirror those of his ally and friend Viktor Orbán, the Prime Minister of Hungary.
And so this is a deeply divided country, a polarised country is the way that some have characterised it. Talk to us about some of those divisions and how the country's changed under his leadership.
The biggest change seems to have taken place when he came to power for the fourth time last year. His stance on not being willing to help Ukraine by sending military aid has really split the nation and supported the pro-Russian moods in the country. He has also cracked down on state media and other media outlets. He has really escalated the standoff with the opposition and the outgoing president. All of these things have really polarized the nation. It's a divided house, and the shooting that happened yesterday is an indication of the divisions, of the moves that have taken over the country.
OK, Bloomberg's Andrea Dudik joining us with the latest, of course, on that attempted assassination of the Prime Minister of Slovakia. Andrea, thank you very much indeed. Now to the Netherlands, where election winner Geert Wilders has sealed a tentative deal to form a right-wing coalition after months of talks. According to the agreement, the coalition intends to cancel a 15% tax on share buybacks and limit the inflow of asylum seekers. Wilders' far-right Freedom Party comfortably captured the most seats in the election almost 6 months ago, but the controversial politician has struggled to assemble an administration. Coming up, Roaring Kitty goes quiet. The meme stock rally fizzles with GameStop shares taking a tumble. That story is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Thursday. Now, the meme stock rally has faltered with a chunk of the GameStop and AMC Entertainment's $11 billion gains wiped out yesterday. The stocks more than doubled after the return of social media posts by Keith Gill, better known, of course, as Roaring Kitty. Let's get more then with Bloomberg's Charlie Wells, who's been across this story for us. Charlie, so we'll take a step back. This has been the week of the meme stock once again, a revival of those kind of 2021 heady days of retail investor enthusiasm for some of these heavily shorted stocks. What drove the rally and what kind of led to the mini pop that we saw yesterday?
Yeah, Tom, I mean, Monday morning, I think everyone was ready for this kind of meme stock mania to kind of potentially grip markets for weeks. And I mean, it really started with that cryptic tweet that Roaring Kitty, Keith Gill, sent out, which was basically a picture of a man kind of sitting on a chair and looking like he was leaning forward. And so traders had kind of interpreted this to mean, you know, that maybe he was back, that maybe he was going to play a big role in GameStop. And of course, we saw GameStop surge, we saw AMC surge, but this was, I would say, at least so far, kind of like a Rice Krispie rally, where we basically saw a kind of snap and then a little bit of a crack and then kind of a pop, where we're seeing the shares kind of dip down. And so I think, you know, you could explain this by, you know, its bullish sentiment. We've seen, you know, the S&P up over 10% this year, so maybe this is traders wanting to kind of get in. You know, there was the tweet, of course, but as well, you know, Wall Street has kind of wised up to Wall Street bets. And so, they'd been seeing some options activity on some of these shares pick up. They know when to get in, but I think importantly, they know when to get out. And I think they know that, short squeezes are something that Wall Street Bets likes, and they've been limiting their exposure to that sort of thing.
Is the Rice Krispie rally, is that a Charlie Wells special?
I just thought that up. Yeah.
You did? That's amazing.
It's breakfast time.
Yeah, fantastic. We're going to run with that, Charlie. I love that. The way that Wall Street pros have kind of adjusted this is really interesting, isn't it? Talk to us about the potential... What does it mean in terms of the consumer, then? The consumer read-across from some of this meme stock activity?
I mean, it's interesting, right? Because these are retail favorites. Retail investors are consumers. And I think there's one story you could tell that, the consumer is confident enough here. We've been seeing a lot of strong consumer sentiment across economies. And maybe you could read into this that the consumer is not just spending, they're also speculating. They know that GameStop and AMC are speculative bets, and they've got the spare cash to go in here. But I mean, there also is another world where this is more of an institutional play that Wall Street, as we've been talking about, has wised up to this. And there's some indication that instead of what we saw in 2021, where a lot of retail dollars were buying in, actually on some of these trading platforms, you saw retail selling. And so that could be an indication that some of these retail investors are thinking, all right, I'm actually down from peaks that we saw in 2021. Prices have finally hit a place where I can take some profits. So that could have been happening. It's a very different vibe than 2021.
You've been across some of the social media platforms, the likes of Reddit as well, Wall Street Bets. What is your sense when you go through those forums, when you speak to people engaging in those forums, as to whether or not we're done with this now, or whether this could rise again?
Yeah, Tom, so I've been down in the trenches talking to a lot of these Redditors, and the sentiment is different because back in 2021, there was this kind of us versus them, this is a new world order type of situation. And instead, some of the traders that I've been talking to, they've got in, they've got out, they saw this as an opportunity to make some money, and they're fine with it. And I think what this says about the future is that, this rally, I mean, it could continue, it's looking like it won't, but that these sorts of spurts will be back because structurally, social media investing is something that is here to stay. It won't create necessarily what we saw in 2021, but these bursts are likely to be around for the future.
Okay, really interesting in terms of how that has evolved. Charlie Wells, thank you very much. On all things, of course, Roaring Kitty and the implications of that. Now to the more stories making news this Thursday. Warren Buffett's Berkshire Hathaway has unveiled a $6.7 billion stake in insurer Chubb, ending months of suspense over its mystery position in a financial firm. Regulators previously allowed the stake to remain concealed. Berkshire disclosed the holding in a filing reflecting its positions at the end of the first quarter. The conglomerate has been building the stake in Chubb since 2023. Shares in the insurer jumped in after-hours trading. Bloomberg analysis of other 13F filings show hedge funds continue to lean into AI-focused tech companies. Institutional investors lifted exposure to Nvidia, with the AI darling having the biggest increase by market value for a single stock in the 3 months ending March 31st. They also increased exposure to AI leaders Amazon, Meta and Microsoft. And Bloomberg has learned that Ken Griffin's Citadel Securities generated $2.3 billion of net trading revenue in the first 3 months of 2024, setting the market-making firm up for a potentially record year. The first quarter result was up 68% from the prior year. The results offer a rare glimpse into the privately held firm, which has steadily expanded its market-making capabilities, most recently in corporate bonds. There is plenty more coming up, particularly from the Qatar Economic Forum, including in conversation with Raj Ganguly, the co-founder and co-CEO of B Capital. That exclusive interview is next from Doha. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Global stocks rally with the S&P 500 hitting a record high as cooler US inflation reinforces bets on Fed rate cuts. Slovakia's Prime Minister in hospital after an attempted assassination in broad daylight. The shooting of Robert Fico brutally exposing the widening political divide in the EU nation. Plus, Russian leader Vladimir Putin is given the red carpet treatment in Beijing as he looks to Chinese President Xi Jinping for backing in his war against Ukraine. Let's check in on these markets then. Risk on, fueled by the softness of the inflation data out of the US and the weakness around retail sales. European futures looking to build on the gains then, up 0.2%. FTSE 100 futures pointing higher by 29 points. The S&P back above 5,000 for the first time. Of course, that's a record. And looking to add to that by about 0.1%. Nasdaq futures looking to gain 35 points after the tech-led rally of yesterday, pointing high by 0.2%. Let's flip the board and look cross-asset then. 10-year benchmark yields falling 10 basis points yesterday on the back of the CPI print, currently at 4.31 on the 10-year. Yields are down a further 2 basis points. The Bloomberg dollar index, softness, of course. The dollar dropped on the back of that data, currently down another 0.1%. Copper in focus for us, still gaining 1.4% so far in the session. Iron ore also getting a lift with the linkages, of course, to the China story, currently at 117, up more than 3% right now. Let's get back to QEF, though, the Qatar Economic Forum in Doha, of course, powered by Bloomberg. Bloomberg's Haslinda Arman is there for us with a guest. Has.
Hey, Tom, we're talking about funding, that funding winter that forced 35,000 startups in India to go bust. And we saw investment in Africa drop about 30%. Let's get insights, perspective. Raj Ganguly, co-founder and co-CEO of B Capital. Good to have you with us.
Thanks for having me.
This funding winter, is it ending?
You know, I think the funding winter is going to take at least another year before it ends. But in many ways, it's a good thing. We need consolidation in the industry. There were too many startups. There were probably too many venture funds. And there's a flight and a move to quality right now, which I think over the long run is going to be good for the industry.
But what are the signs that make you upbeat that we're seeing probably close to the end of this funding winter?
I think there's a few signs. One is you're starting to see a little bit of IPO activity. It's still early, but you're starting to see a lot of corporate M&A activity. A lot of corporates that have cash are getting off the sidelines. They're interested in AI. And they're starting to be acquisitive with all that cash that they have. And that should put liquidity back into the ecosystem and eventually get us past this funding winter in venture.
Therein lies the problem. AI, not a day passes by when you don't talk about AI. Some are suggesting perhaps that AI winter is coming and perhaps year end is also what we're looking at.
I think it's hard to predict if you know, when this AI bubble might burst. We're definitely in an AI bubble, but I have to say that we at B Capital, we really believe that AI is going to have a profound impact. Our partners at BCG are forecasting that 5 to 10% of IT corporate spend is moving towards AI. That's rapidly moving up. Interest in the space is really red hot. And, you know, it is still very early days in terms of adoption of the technology, but the valuations have gotten a little ahead of themselves.
So too soon to talk about an AI winter, perhaps 25, 26?
You know,
is there a gauge?
I'd love to say that we know when that bubble is going to burst, but the prices are undoubtedly high. But some of these technologies are really transformative that we're starting to see. I mean, starting with really just the Copilot technologies in terms of helping programmers code better and faster. I think it really changes that whole dynamics of everyone looking for those 10x coders. Now, hopefully, you could take a 1x or a 2x coder, a really good coder, and make them a 10x coder through AI technology. And that's a huge impact.
Raj, higher for longer. Nobody expected rates to be this high for this long. How is it impacting the funding environment?
I think, you know, there was a little bit of good news in the last 24 hours on the inflation side.
That's what they said at the beginning of the year.
I fully agree. And, you know, fundamentally, I think in venture, we don't worry that much about where the rates are. We are focused on fundamental innovation. Technology is rapidly innovating. You look at the return of the biotech industry, which in the last quarter has really been resurging. That's an industry which for 3 years was really quiet, but there was fundamental innovation happening, and you can invest at better prices. And we all know that some of the best venture capital investments happen during these kind of funding winter times.
In the end, it is about valuations. And we've talked about how the era of elevated valuation is over. What are you making of valuations right now? Are they looking attractive?
I think valuations are a lot more attractive than they were 2 or 3 years ago. On the early stage venture side, I think there's just continued to be a lot of activity. It tends to be a side that's fairly far from the capital market, so it's less impacted. Where you've really seen the impact has been in the growth market, where valuations have come down anywhere from 20 to 50%, and some really great assets and companies that are profitable, that have been able to keep growing their revenue. So we continue to be an active investor at B Capital across both the venture and the growth stage globally.
And of course, you raised $730 million recently for late stage startups. Why? I mean, you're looking at companies already in your portfolio. Are you suggesting there's, no other attractive startups out there that you'd rather just focus on what you have already?
I think it's a little bit of a mix. We will continue to back some of the best companies in our portfolio. We think that those are companies that even through the last 2 or 3 years where the markets have been slow, that they've just really continued to perform. But we'll make some select investments in new companies, which we know really well, which are later stage companies that have struggled to attract capital in this current environment.
What's looking attractive, and where can you find them? People talk about India, but India's had a torrid time.
I long-term still bullish on India. I think sector-wise, as I mentioned, biotech's come back. I think cybersecurity in an uncertain world continues to be an area that we look at. Fundamentally, I think in AI, there's the AI infrastructure layer, which is very still early in its development, but we're starting to see the AI application layer, and that's really exciting. And it's not just going to be the U.S. We think countries like India will be a big player in the AI application layer, both in terms of horizontal applications, but also areas like fintech and supply chain. They're going to be really impacted by AI over the next few years.
Let's pick up on India. We've seen some froth come off the market. What is that suggesting to you?
I think, I think a lot of people got very excited about some of the fundamental changes that are happening in the Indian market. One of the most important ones is that there's just more ability for companies in India to IPO in India. But we have to see how that goes. I think over the second half of this year, you'll see a few companies that do IPO in India. In the past, you had to go to the U.S. You had to go to either the NASDAQ or the New York Stock Exchange. If India can develop its own liquidity market, I think that will have a big impact on the venture market in India.
We're here in the Middle East. I'm just wondering what your thoughts are about the space here.
I think the Middle East for us as a global venture capital investor, has always really been an interesting market. But over the last few years, you're really seeing signs that the market is reaching that tipping point. You're starting to see more companies coming out in the AI space, in the healthcare space, and especially in climate technology. We think that the MENA region will be a leader in climate and energy transition technology, and that's an area that we're really interested in at B Capital.
You talked about how you're not too concerned about this higher rate environment. So what are the risks out there for you?
I think the biggest risk for us is to make sure that the best companies in our portfolio don't run out of funding. I think we all learned from 2008, 2010, 2000, 2004 that even really great companies, if they don't manage their cash very closely, that sometimes growth coming a little too fast can really be a drain on cash. That's our biggest focus, working with our companies, making sure that they are managing their cash flows, that they're growing at a reasonable rate, and they're growing profitably.
All right. Raj, thank you so much for that. Raj Ganguly, co-founder and co-CEO of B Capital. Of course, Tom, we're coming to you live from the Qatar Economic Forum. Well, a busy day ahead.
Has, great stuff. Thank you very much indeed. Bloomberg's Haslinda Aman, of course, with Raj Ganguly, co-founder and co-CEO of B Capital at the Qatar Economic Forum in Doha. Plenty more exclusive guests, as Haslinda was saying, coming up on the third and final day of QEF in Doha. Plus, Siemens sees factory orders drop as China weakness continues. We bring you a breakdown of the numbers, and we're going to hear from the CEO, Roland Busch. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Other stories making the top stories or the top news today. The owner of Britain's Royal Mail is poised to accept a £3.5 billion non-binding bid from Czech billionaire Daniel Kretinsky amid struggles to modernise the beleaguered postal service. Parent company International Distribution Services, IDS, says the board has indicated that it would probably recommend an offer at the 370 pence per share proposed. IDS had strongly rejected the previous offer. Italy is selling a €1.4 billion stake in oil giant Eni as the government looks to reduce its mammoth debt. Prime Minister Giorgia Meloni's administration launched the placing through an accelerated book building. The government is working on a plan to sell around €20 billion in state-held stakes by 2026. And Deutsche Bank says a second share buyback this year is now less likely. The German lender had pledged to carry out another buyback just a day before it made a surprise announcement on €1.3 billion in new legal provisions. The remarks to Deutsche's investors are the starkest acknowledgement yet that parts of its payout plans have been thrown into disarray. Now, one of the big earnings stories coming through from Siemens, disappointment, particularly when it comes to the China part of its business, which seems still to be cool. Orders dropping, revenue stagnating then in the fiscal second quarter. Again, the factory automated demand out of China remains weak, continues to lag on Siemens. It kept its overall outlook for the year unchanged, but it has lowered guidance for its key digital industries unit. We know that analysts were scrutinising that. It said that revenue within the digital industries unit could decline as much as 8% this year. Just running through some of the key lines that came through in terms of the earnings. Second quarter industrial business profit for Siemens coming in below the estimates, €2.51 billion. The estimates had been for €2.76 billion. It was a miss as well in terms of the industrial business margin. That came in at just 14%. The estimates had been for 15.2%. And they're setting a guidance in terms of full year comparative revenue of between 4 and 8% in terms of the growth. Now, Bloomberg's Oliver Crook has been speaking to Siemens CEO Roland Busch about the company's performance and the economic outlook in China. Take a listen.
Elements which seems that it takes a little bit longer to recover, and let me go through them. Number one is the private consumption is not picking up. Consumers are sitting on a record high savings level, so there's a little bit of confidence missing, number one. Number two, the construction sector, which was really driving momentum, is really going down now. But this is by design. It was just overheated. Then we have a lower direct investments going into China. Reason is companies are also starting to increase their resilience, investing in other areas, which is another element. And so this package, this all together, is somehow still holding China back. China, they are issued now some measures, for example, subsidizing the replacement of white goods with more energy efficient one that will come. But again, it takes some time and it goes slowly.
I may add another list to that list of the things that might be slowing China down, which is that we've got the next couple of weeks, the EU is going to give the sort of outlook on what they're going to do for Chinese EVs. Just this week, we got more tariffs from the Biden administration on many of the products in the Chinese economy. Do you think that will delay the Chinese recovery substantially?
Well, I mean, this indeed, you have one point. The export is also not that strong for the global economy. Is not pulling products so much as used to be because China, China is an export market, and the tariffs don't help. I mean, tariffs in principle they are triggering then counter tariffs, which is not good in general. This increases the price for consumers, which we don't believe is a good idea. At the same time, if the argument is about overcapacities in the automotive industry, for example, there always have been overcapacities. So what's the level? Does it really impact too much? I didn't expect really that the Chinese market would really substantial flooding the American market with the EVs. I don't believe that this is such a strong demand there. Same for Europe. So therefore, I do not believe that this has huge impacts. But I mean, this tariff and counter tariffs is maybe not what we want to see in a market which is start to picking up in growth in general.
Yeah, and I'd like to get your perspective on that question of overcapacity, because if you ask a lot of the European countries and politicians who want to see a green transition, kind of what you need is overcapacity in certain things like, say, solar panels and these sorts of things. But what do you make of this argument that China is exporting all of this overcapacity to the world?
I mean, the argument goes back that they say there's an over-subsidizing of certain, over-support subsidizing of certain sectors, which causes overcapacities, and they are offloading it to the market. I don't believe that too much. I mean, take this solar industry, solar panels. I mean, most of them are coming anyhow from China. So it's maybe a good idea if you want to drive the energy transition that you get cheap panels from China in order to really drive the energy transition. That's what we want. We want to increase our photovoltaic. So therefore, I do believe this is an argument which we have to look a little bit deeper. We do not believe in increasing of tariffs. Free trade is good with and low cost of goods, which are driving in particular our agendas, and one of them is reducing carbon footprint. So therefore, I hope that this is not the start of a tariff race.
And then I want to go from China to Germany and our, the home market here. Do you feel that sentiment is beginning to pick up in Germany? Do you see a recovery in the economy?
Well, not yet. I mean, you saw the latest news on the GDP expectations. Germany more on the lower end. There are a lot of things, structural things, which we have to do. We have to work on our infrastructure investment. We are still talking about our Schuldenbremse, so putting a brake on our debts and our debt of the government. So at the same time, we need a lot of investment.
Do you think the debt brake needs a reform?
Now in defense, we're investing. You have to. Pardon me?
Do you think the debt brake needs reform?
We have to. Well, I do believe that selectively it makes sense to do that. I'm pro really a tight hand on budgets. We should really be tight on our money. And again, there's a lot of inflow of taxes. But the other side, we have a kind of an underinvestment, for example, in infrastructure over so many years. It's an underinvested distribution grid and transmission grid. So to catch up that, at the same time put a brake on spendings is something what is contradictory. So my point is we should have maybe picked up the point and saying we have to invest over, let's say, outdated infrastructure. This goes also into schools, universities, so the education system and the like, and then start putting a harder brake on it. So there might be a selective release, would be a good idea. We need Germany to do some basic homeworks. Again, this is the infrastructure, it's education, but also others, like we have to manage our immigration pattern. We need an inflow of immigrants. And this is the reason why we are voting now for openness, tolerance, and respect for people.
OK, Siemens CEO Roland Busch, of course, speaking to Bloomberg's Oliver Crook on the back of those earnings. There's plenty more coming up. We're going to do a deep dive on that CPI data and where it's left positioning in terms of expectations for the Fed. This is Bloomberg.
Inflation it's taking its sweet time coming down, but we still think it's a downward trend.
The big picture on a core basis is that the rate of inflation has come down a lot.
Really great set of data, I think, for the Fed, especially on the inflation front.
This, to me, is a chair who wants to cut. I think that, and you can easily see one, and I think if he has the opening, I think he'll do two. And I think data like this, if it persists, I think that'll give him that opening.
I don't think July, but I do think September is possible.
We need to see more weakening in the data, especially on shelter inflation, for the Fed to begin to gain confidence and get comfortable in terms of beginning to ease rates.
The truth is, I don't think that we're heading into a higher for longer environment. I think we're heading into a normal for longer environment.
Yes. Some of our guests there on Bloomberg TV reacting, of course, to the latest US inflation print. Disinflation taking its sweet time. And why is it taking its sweet time? Because the moves have been there, of course. You did get that expected data print that came through slightly softer. That, of course, fueled the rally that we're seeing. Core remains at 3.6. The headline remains at 3.4. It's coming at 3.4. So the weakness is coming through. A little bit of softness. Disinflation narrative is going to be back, certainly for the markets. You're seeing that cross-asset. But the stickiness is within services still. There's been work done on food. There's been work done on energy. Rents, a little bit of stickiness there. It's come off a little bit in the most recent data, but that is a concern. Services, though, is key because of the wage component within services. And you can see that. That's the white bar that reflects what's happening with services. In contraction is core goods. So that move has been significant from the pandemic era. Goods, core goods, manufactured goods, prices actually contracting. Services remains a challenge for this Fed. Let's flip the board and have a look in terms of the Fed pricing then, because some of our guests commenting on that, of course. You've seen where we started the year, of course, where 5-6 cuts were priced in, worked all the way back down again. Now you're back up to markets pricing in 2. Interestingly, Bloomberg Economics says July is a live meeting. That's not consensus yet, but Bloomberg Economics, Anna Wong, saying that July is a live meeting for the Fed. September, though, is priced at about 60% in terms of the chance of a 25 basis point cut in September. Let's flip the board and have a look in terms of the repricing as well across the dollar and treasuries, because you take you back to the time in March when, of course, you had that third straight print of higher inflation, higher CPI, and you've got that significant move higher up in yields and a significant move higher up, of course, in the Bloomberg dollar index. This is the 2-year yield. It is back down. It's paired essentially all of the gains, all of the upside that came through in yields since that shocker of an inflation print in March, and the Bloomberg dollar index as well. The strength in the dollar has essentially all but paired the strength that's come through for the Bloomberg dollar. And you're seeing the gains, of course, across Asian FX today on the back of that, particularly the yen. Now, there is plenty more coming up, of course, on the show. Bloomberg, including, of course, interviews. The standout will be JP Morgan CEO, of course, Jamie Dimon, because we're going to be at the Global Markets Conference. We're back in Paris. The CEO, of course, of Jamie Dimon, the CEO of JP Morgan, Jamie Dimon, is going to be speaking to us. We're also going to be speaking to the lender's chief economist, so views there, no doubt, on that CPI print and Fed expectations, the views there from JP Morgan about that disinflationary trend, how much conviction they have in that view. And interestingly as well, the head of global commodities strategy, no doubt a conversation about what's happening with copper, with the short squeeze that continues in the US, and whether or not that copper story has further momentum. Jeff Curry, of course, telling us yesterday that he sees 15,000 on copper. Iron ore is also getting a lift in the session today as well. We're also going to get interviews with CEOs continuing through Markets Today show. The CEO of EasyJet is coming up on Markets Today. That's at 7:45 London time. Markets Today coming up next. This is Bloomberg.